Good evening, everybody. I would like to take this time on this wonderful Sunday evening to talk to you about one particular trade that may or may not trigger very soon. Of course, we put in our entries and not all trades get triggered, but I think this is a good solid level, and I think that this is a high probability trade. Now, of course, nothing is 100%, so use your money at your discretion. You may use this as just educational purposes, but again, the decision is up to you. Clearly, trading involves risks. Now, the trade that I want to enter, believe it or not, is a short on gold. And even I myself took some convincing on that, because ultimately I think gold is going up with everything that's going on in the world. I think eventually just more and more news is going to start emerging and people are going to run to gold. They're going to see that these currencies are less stable than they think, and clearly gold is going to be a safe bet for a lot of people. And so that is my ultimate thought on gold. However, this trade is a short-term trade and nothing goes in a straight line forever. So this trade is just the idea that I anticipate some sort of pullback in gold, and then if I'm right, then I could obviously even go short gold. And I think that this probably will happen in the near term future, probably the next week or two. That's my reasoning. Speaking of reasoning, let me show you why I would be so crazy as to say that I want to go short gold. And I know what you're thinking, but the idea is that we can all get carried away by the news all you want, but the news is not going to make you money as a trader. Use it just for entertainment. Just like we watch these shows on television, they're only for entertainment purpose. We don't gain anything by watching those shows. So look at CNBC, Market Watch, Bloomberg. Look at them for entertainment purposes only, but don't think that they're going to make you money, because they won't. What's going to make you money is the data, the technicals, what's really going on. And the more it takes to find out something, so in other words, the more hidden something is in trading, the more likely it's going to be correct. Nobody wants to tell you their secrets, right? And so if you go to CNBC and there's this big headline, market is going, Dow is going to 20,000, well, you probably want to be short when you see that, right? So what I want to show you are some small little things that I have isolated on the gold chart that tell me to go short. Okay, so the first thing I want to talk about is this thing called the Commitment of Traders Report. Now, if you're a seasoned trader, you probably use this on a weekly basis. It's part of your ritual anyway, but if you're a new trader, let me explain this to you. The Commitment of Traders Report is a report that comes out every Friday afternoon, and since Friday afternoon is not very busy in terms of trading, it's probably a good time to pull this report up and to take a look at it to see what has transpired. So even though this report is released on Friday afternoon, it only includes data that is up to that week's Tuesday's close. So in other words, you're not going to have data on Wednesday, Thursday, and Friday, even though it's coming out on that Friday. So that's something to keep in mind. So just understand that the timing in some market trends and reversal, just based on this particular Commitment of Traders report, is not going to be exact, okay? Because there's a little bit of a lag there. But nonetheless, it is a very useful tool that a lot of traders don't use, and I look at it every week. Every week, it's kind of my weekend ritual. So that's something that I digest every weekend, and I advise that you do the same thing. So this particular chart is only for the gold futures, but if you're interested in anything else, even currencies, you're gonna have that in that report as well. And you can find these convenient charts that summarize the commitment of traders reports based on the futures contract that you want to look at. And they're free. All you have to do is do a little bit of searching on the internet and you'll find them. So for the gold futures, what I'm seeing is that the commercial money, get this, is loading up on the short side. Now at first I looked at that and I said, why? Why would they want to load up on the short side? Europe is having problems. Greece doesn't want to pay off their debt. The Russian ruble is falling like crazy. Japanese are printing money like crazy. All these banks are having problems. There's all this instability in economies, instability in the Middle East, and all this kind of happened suddenly in January. So my question is, why would they want to go short? Isn't this a time when everybody's scared and everybody's loading up on gold? Why on earth would you want to go short something that's going up? Well, the reason is because commercial money is the smart money, and they know something that we don't know. So in this case, commercial money are the actual miners and producers. They're the big investment funds. So they have data that we don't have. They know how much supply there is out there. They know how much demand is out there. They have particular programs that tell them what's going on. They have insider information. So they have information we don't have. And they're usually right. And so who am I to say that they're wrong? I should trade just like them, right? So what they're doing right now is they're loading up on the short side on gold. And this particular chart is of the last 12 months. And what's particularly interesting on this chart is that in the last 12 months, commercial money has never been short like it has now. So this week, at least through Tuesday, they have loaded up on the short side on gold like there's no tomorrow. If you just look at the last 3 weeks and look at how aggressive they have been in loading up on the short side, that is very commendable. It's very impressive. And as I said, we haven't seen this in a whole year. And so what I'm trying to say is that based on this, there may be a move or a reversal in gold. And of course, it's difficult to pinpoint where that reversal is going to be. It might be immediately next week, okay? And maybe their short positions decrease as they start unloading, because again, they're hedging to protect themselves, and so they never know what's going on. And so what they do is, these producers, they just go short. They go short. They don't go long. Okay, they don't go long because, again, why would they go long? They have the actual mine, right? So that's them going long, right? They have the business of mining gold, but they actually go short in case something happens, and they just get rid of gold when it finds a bottom. And that's how they make their money. They make their money getting gold out of the ground, and then they also make their money in the markets when gold is going down in price, and they're just covering. But they're actually the major participant in the gold market. They're well above 50% of the market. So they're the ones that move the markets. So you have to pay attention to what they're doing. And right now they're shorting it. They are adding shorts like crazy. Okay? So if I were to compare the chart of GLD, which is the gold ETF, to this gold futures chart that shows us what the commercial money is doing, you will find that there are some very interesting things that we can find on the charts that are literally worth their weight in gold, no pun intended. But if you have a trading account and you're looking for a way to invest in gold, by all means, look at this Commitment of Traders report, because it is very reliable, at least in the past 12 months. Of course, things can change, but for now, I respect this chart very much and I actually use it. So let's look at the chart of the GLD and look at what's been going on in the past 12 months. Now, the best thing is to look at the weekly, because that would coincide with the report being on a weekly basis as well. Now, granted, you have to keep in mind that the report only goes up to Tuesday, and so what happens is that these, because this is smart money, these commercials kind of buy sooner, right? Because it closes on Tuesday, and then we get the report with the date of that Friday. So in other words, they're not trading Wednesday, Thursday, Friday. You don't know what they're doing. So of course, them being smart, they're always the first one to get in on a reversal side. But nonetheless, take it with a grain of salt, because the timing is a little bit off, but it's still very reliable. So if I just readjust my charts a little bit to let me increase this so you can better see it. So let's track the GLD weekly chart, which is at your bottom, and then look at the Commitment of Traders report for the gold futures. And we have to start with January 2014. What happened is that the very last week of December 2013, gold found a bottom and then rallied all the way until March 3rd. The week of, March 17th. So March 17th, it opened higher, but then it started gapping down, and we saw what happened after that. So the week of March 17th, we saw a reversal. What did the smart money do? Well, they didn't want to be long, okay, because, first of all, let me say that they don't go long, okay? Again, I just explained that they don't go long. They usually just short, because that's their way of hedging to protect themselves. So what happened is that they did not participate in the market. They don't participate in the market when gold is going up higher, because they're not shorting. You don't short a stock as it goes higher. That's counterproductive. You want to short it when you find the top and it goes lower, right? So they're not participating in the market starting in January 2014, and then they eventually start adding more and more shorts until the week of March 18th. The week of March 18th, what happens is that we find a peak in terms of the volume in the shorts, and then it starts decreasing, and as you can tell, this was a perfect reversal on their part. And again, why would it reverse? Why? Because these funds are holding the money, so they push the market. So what happened is that they started loading up on the shorts, and then they started getting rid of them. So they pinpointed a top, March 17th. Next thing, what happened is that they started unloading their shorts as the market was going down lower, and then ultimately the week of June 2nd, we found another low. Literally, this is where the lowest volume was in terms of their shorts, and of course this is they had unloaded by now, okay, and then the market picked it up. So then these other investors picked it up to the going up higher. one thing that I've noticed, now I don't know if this is enough data to make this conclusion, but take it for what it's worth. I noticed that there is sort of a 50,000 share base in the commercial money. So a little bit higher than that. But if you look at everywhere we've had about 50,000 shares, that is approximately when gold found a bottom. So it will be interesting to watch this as it unfolds in the next weeks and months, and to see gather more data and see if gold will reverse next time this report shows 50,000 shares short on the commercial. So I'm very interested in that, and I'm intrigued, and I will be watching that very closely. But based on this, it appears that they unload their shorts when they're at 50,000 net short, and it appears to me that maybe this 50,000 net short is sort of them having some money in the bank, just in case, to protect themselves. Because when you're hedging, you don't want to go to extremes of having a complete portfolio full of something and then having nothing at all. So when you're hedging, especially for these guys that need to accumulate slowly without affecting the market, and so they need a lot of these contracts, they don't want to find themselves at zero, right? So this is common sense for me. So I would think that this is probably their base in what they want. So they want to have at least 50,000 contracts short. Nonetheless, so we found a where was I? June 2nd, we found a low, okay? And that is when they were not participating in the market, because as I said, they only go short, they don't go long, okay? And then what happened is once we put in the low, we started reversing to the upside, and then July 7th, we found a new high in gold. And if you look at July 7th, by this time they had drastically loaded up on the shorts, okay? And what I want to point out is that based on this, I can also imagine or somewhat project how much of a trend gold is going to have. So think about it. These people are the ones mining the gold. They know how much supply they have. I mean, obviously, they know what the demand is. There's all this smart money, all these smart funds, so they know what's going on. And so if they know that gold is going to have a big down move, so notice out of these, there was a very big down move from July 7th to November 3rd. So what this meant is that they had more time to unload their shorts. And so there was less pressure on them to unload their shorts. And so what they wanted to do is they wanted to wait later to unload their shorts, because this is when they would make more money. And as you can see, based on these red bars, notice how in the beginning we just had these small red candles, then some more small candles, and then okay, they got a little bit bigger, but then look at this one. This is when most of them unloaded. Let me check the volume, because I think that will be very interesting to look at the volume. So has there been an uptick in definitely there has been an uptick in volume. So if you look at this one, had about 38, this wide range bar had about 38 million. This one did also have 65. So it seems that there is well, there is a lot of volume. But if you look at the first ones, right, the first ones don't have that much. So this one has about 23 million. That one is 31. That one has, now I'm just guessing because it's not the point of my argument, but notice how here we have 20 to 30 million, and then as we get into these wide range bars, we got 38 million, 35. So there's a slight increase in volume, and then we have these wide range bars. Why? Because these guys are most of the market, and so they just took their sweet time. They knew that gold was going to take a little bit longer to get to the downside, and so they said, well, we have more time, so let us wait. And then they waited until the last couple of weeks, and this is where they made all their money. That's how you got to think. So we found a high July 7th, okay? So July 7th, and then we had this broad side, not sideways, but somewhat muted downside. They took their time unloading, and then we found a low November 2nd. So let's go back to the report. What happened November 2nd? November 2nd, notice how they basically dumped. So this was that wide range bar right here. This wide range bar was them dumping. Now keep in mind, I'm not comparing the actual futures. I'm looking at the GLD compared to the gold futures. But nonetheless, I mean, this is all related. So what they did is they unloaded approximately 50,000 shorts. And this sudden move is what gets you these wide range bars. So they unloaded this, and then they got to their 50,000 safety zone, just in case something happens, let us be short. So that's what happened, and then eventually it started moving up back higher, and then they started loading up their shorts yet again, and now we are at this unprecedented time where they have 200,000 short contracts out there. So it would be very interesting to find out what they know about the market. So what I'm thinking is, just based on this, nothing else, just based on this, what I'm thinking is that the market, at least in gold, has a huge reversal coming. So I know a lot of people have been volatile on the in terms of the market, and I agree with you, it hasn't been the best. But based on this is telling me that fear is going to come out of the market, at least in the near term, and that people are not going to really buy gold. Okay? So this is just telling me that they want to go short. They want to go short. So fear is going to come out of the market, and they think it's going to go down lower. So at least gold is going to go down lower, not the market. So this is very interesting. I think it's a great tool to use. Now, of course, the question is, again, and as I mentioned this, is this sort of their final loading up on the shorts, or are we going to see another week where they load up some more? Now, of course, this is going to coincide with the market. And I'll be honest with you, I think we've seen a month's worth of downside on the markets, and I think the probability that it's going to keep doing that, in other words going down lower, is decreasing. So at some point the market's just going to have to break out to the upside. So we're looking at some sort of low in the overall market, whether we've already hit it or we're going to do that in what I think is about a week or two. I'm not sure, but I think the market's looking for a bottom. We might see some more downside, but not much downside in the markets. And then ultimately we're going to see some sort of reversal. And what these guys are saying is that the reversal is going to be so good in gold that we're going to just give all this cash out to these shorts. So think about it. Why would you take all your money and put it in shorts? Obviously, they know something we don't know. And what we want to do is we want to be on their side. And that's why I want to be short gold. Okay? Now, I don't want to hold this trade for very long, but I want to hold it enough so that this move actually happens. And then we can get out and hopefully we can make a profit. Now, having said that, this is not the only thing that will suffice as far as reasoning. You need more reasons, namely you have to look at the technicals. So let's put this aside. So I've spoken about this Commitment of Traders report. Again, it's available anywhere on the internet. All you have to do is a little bit of searching, and it's free. Okay, and you can look at other things. You can look at futures, options, whatever you want, currencies, major indices, commodities, whatever you want. This is just for gold. So now let's look at the actual technicals. Let's do some technical analysis. Now, what I want to do is look at some of my indicators. Namely, I want to look at the MACD and the stochastics. And generally, what happens is when you are looking for something to reverse, it usually happens on a smaller time scale first. So if I'm looking at a monthly, weekly, and daily, what technically should happen is that the daily is going to give me signals of a reversal, and then the weekly, and finally the monthly would confirm it. And so let's kind of make this story of progression from monthly to weekly to daily to find out if gold is showing us some signs of weakness. If we go to the monthly, ultimately what this is telling us is that we have some sort of ABCD structure right here, and that ultimately gold wants to go higher, and the technicals confirm it. So you have your stochastics that beautifully this month have broken out to the upside. So the fast stochastic has broken out. So this is definitely bullish, but keep in mind we are looking at a wide time frame. We're looking at the monthly. Now the MACD is still struggling there, but the numbers are getting there soon. Okay, so we're gonna see hopefully some sort of uptick in the MACD, but sometimes the MACD lags. So if you see something like this, don't be concerned. Your stochastic usually goes first. But ultimately in a couple of months we might have some sort of confirmation on the MACD side as well. So bottom line, monthly, no question about it, telling us gold wants to go higher. And why not? Based on what's going on in the world, it should. But again, we are, for this particular trade, we're short-term traders, and that's okay with us. The next thing we want to look at is the weekly. Now the weekly looks very different on the stochastic. So here the stochastics are not in the zero range. They're actually right where you want them to be if you want to go short. So the stochastic looks like it's trying to find a near-term high, and ultimately we'll see if this happens next week or not. But we want to see this fast stochastic, which is the blue line, go below the red or the slow, and that would be a good trigger for a short. Now the MACD, again, for now I'm not concerned with it, but I think the stochastic is a good indicator for now, and we are seeing signs that now on a smaller time frame there's a little bit of weakness in gold. And if you think about it, last week the markets had some very volatile days. If you just look at Wednesday, Thursday, Friday, with what's been going on with the Fed releasing their statement and the market selling off on it. Friday, nobody wanted to hold into the weekend, so the market sold off on it. So there has been a lot of volatility, but gold, if you look at the weekly, in the last 2 weeks, really has put in these two doji lines. So to me, this is looking for a little bit of momentum to give us one more push to the upside, and I'm anticipating that this one more push to the upside is going to be a good short opportunity. Whether or not that happens, nobody knows, but that's my reasoning. That is what I project. But on the weekly, stochastics are telling us that gold is looking for a near-term top. Looking at the daily, so the daily shows us that it may have already happened. So the daily is telling us that the stochastic is turning lower, so this is bearish, no question about it. And on Friday, what happened, even though gold was up over 2%, there was something very interesting in the MACD. The slow crossed over the fast stochastic. So now the idea is that we want to see this pull down lower. Now again, what I would like to do is, I'm not concerned with the MACD and stochastics yet. What I would like to do is, even if they stay where they are, I would like to see one more push up higher if we see some more downside in the markets. And then the idea is that, okay, they can go down lower, and then hopefully we can grab some money with the big commercial traders and the big commercial money. So that's the idea with the stochastics, with the MACD. And again, you might argue that this is a little bit of bullish consolidation to have one more push up higher, but we'll see what happens. Now, I have a couple of trend lines that I have drawn in, and I want to show you those. So let's get rid of the stochastics and the MACD. We took care of that. So if you look at the weekly chart, in this particular instance, I have these two trend lines, and you can argue that they're the same trend line, but I think nonetheless having both trend lines is very, they kind of confirm each other. So what you have is, with the red trend line, you have a little bit of a pivot right here, which goes into this pivot low right here, moves through, and then it gets into these highs that we have seen as of late. So definitely resistance. That's definitely a good resistance area. And of course the blue line would confirm all of this for us. And so if we go to the daily, what we will see is that we are approximately looking to find some resistance up here. Now, technically this level, you could short it right here at 126.71, because this level, depending on when it gets there, of course the longer it takes, the lower this resistance is, but technically our short entry should be around the 127 area. That would be a good short entry. If you are aggressive and are afraid of missing the trade, which nobody really should be, but if it gets there and you're aggressive, you could start shorting there. Personally, what I'm going to do is, just to protect myself based on all this volatility, I would like to let it overshoot a little bit and get it at least at the 128 level. But if it goes above these, and again we have stops in place, but if we see it trading above in this area, then clearly resistance has broken and we will need to stop out. But I think around the 128 plus area is good. So if we could get to that level, now we do have some momentum to gain to get there. So obviously I would not short gold right now, but I would wait to get to this level. And the best case scenario is to see continued volatility into next week, and sometime next week, if the market could find a bottom, gold might probably get into that level. Now granted, we might have already missed this trade because these resistance levels were very close to where we were trading, so sometimes you just never know. But the idea being is that this is my trade, that's what my entry price is. If it tags it, great. If it doesn't, so be it. There's going to be other trades out there. But just with this volatility, I would feel safe waiting for that particular level right here. And again, if you want to do this trade, you can find it at TradeTheseStocks.com, and I give you the entry, the first target, second target, the stop loss, and all of that. Now again, do it at your own discretion, do your own research. I am not to be held responsible for any losses, and nobody's going to be 100% right. But based on what I'm seeing, is this looks like gold is getting exhausted. Whether we are there already or we have a little bit more room to go, I don't know, but this is the level that I'm looking at. Lastly, before I finish this video, I want to show you some fib retracements. So again, this is Fibonacci retracements. So what we have here is, if you were, let me see here, to take this pivot high right here to this pivot low right here, so these blue arrows. Interestingly, there is a 0.618 retracement at the 127. So that definitely shows us that there is some resistance there. Okay. If you were to look at some of these larger levels, you will find that it's a 0.5 retracement as well. But I'm not going to go into that. The point is that there is a couple of good resistance levels that market eventually has to find a bottom. It's not going to go down and have this volatility like it has been in January. It's going to have to set a direction, and let's face it, we have been in an uptrend for quite a while, and I anticipate that we will be, or at least continue that uptrend at least for another month, and then we'll see another correction, and we'll continue seeing this volatility. But for now, we're looking for a short on gold. And again, if you want to enter this trade, check us out at tradethesestocks.com. And also, if you are watching this on time, I have prepared a weekly market analysis video just yesterday, fresh off of my monitor, and you are more than welcome to watch it to see where I anticipate the market is going to find a bottom.